could be counting more money at the end of every month if Parliament passes key income tax proposals contained in the Finance Bill 2026. The bill, formally received by the National Assembly, proposes sweeping amendments to the Income Tax Act, with workers' pay packets squarely in the crosshairs. Faith Wangari has more.
At 124 pages, the Finance Bill 2026 is one of the most comprehensive tax reform documents Kenya has seen in recent years. Tabled in Parliament on the 5th of May 2026, it touches everything from how multinational companies are taxed to how scrap metal dealers, digital content creators, and even winners of competitions will be required to account to Kenya Revenue Authority.
It looks a very ambitious plan or budget that will ensure that Kenyans or the Kenyan taxpayers have to work hard an extra mile to ensure that this revenue is corrected through KRA.
For the millions of Kenyans who depend on second-hand clothing, the bill proposes a 5% final tax on the customs value of mitumba imports payable upfront, regardless of whether the trader makes a profit or a loss. Landlords are also in the crosshairs. The rental income tax rate is proposed to rise from 7.5% to 10%, a move that the government says will bring more property owners into compliance. In a move that could affect every Kenyan who sends money on their phone, the bill proposes removing VAT exemptions on money transfers and payment processing services.
We expect as a government to generate their internal revenue of around 3.6 trillion, and then the difference or the deficit has to be financed through either internal borrowing or external borrowing.
The bill also redefines interchange fees and merchant service fees as professional fees, pulling banks and payment companies into new compliance obligations that the sector will need to account for. In matters corporate, the Kenya Revenue Authority will gain powers to treat 60% of undistributed corporate profits as dividends, effectively taxing companies on money they have not paid out. Perhaps the most wide-felt proposal, a 25% excise duty on all mobile phones, confirmed in the first schedule to the Excise Duty Act. The bill, as currently drafted, does not spell out revised tax band figures, new income thresholds, or an updated rate structure for individual taxes. The widely discussed proposal to make income below 30,000 shillings tax-free or to restructure the bands to reduce the burden on lower earners does not feature anywhere in the bill's text. What the bill does confirm is that the framework for amending those rates exists, meaning Parliament retains the opportunity through the public participation process and the committee amendments to insert meaningful pay band reforms before the bill is passed into law.
The minimum taxable amount is going to be increased from 25,000 to 30,000, which apparently anybody earning, let's say for example 50,000, currently would be paying around 5,800. That's pay as you earn. If that goes through, it means that probably would be a half of what we could pay, around 2,000. 2,500, somewhere there.
The bill is not without its bright spots. Non-resident companies will see their corporate tax reduced from 37.5% to 30%, bringing Kenya closer to regional competitors. A tax amnesty is also extended to cover liabilities up to 31st December of 2025, giving businesses breathing room to clear the slate. On the relief side, VAT exemptions are proposed for electric buses, electric bicycles, dialysis equipment, animal feeds, and infrastructure projects under public-private partnerships, targeted support for health, agriculture, clean transport, and investment. The bill also introduces clearer rules on trust taxation and formally recognizes employer gratitude contributions as exempt income for qualifying long-serving employees, bringing greater certainty for workers and employers alike. The Finance Bill 2026 is now before Parliament. Public participation set to begin on the 13th of May, and for workers, traders, landlords and businesses, the next few weeks may determine whether the bill comes as a relief or a burden. Faith Wangari, TV 47.